Hi guys, my name is Amelie. I'm 24. I live in San Francisco and I just bought my first home, which is crazy to say, especially in this economy. So I wanted to make this video to talk about my own process with home buying and kind of demystify the process because it can definitely be really complicated, especially as a first-time home buyer. So today in this video, we're going to go through the whole process, starting from when it's going to be a good time to start looking for a home, and then how to get a mortgage, how to finance, what to look for in a home, all the way up until the closing process and you finally get your new keys. First, I wanted to talk about why I even decided to start looking for homes in the first place, because obviously it's a really big decision. So for me, I was really looking at condos, one bedroom apartments. That's kind of all I could afford. But for me, this was more of an investment property, one that I probably will intend on selling in a few years, but where I could live in the meantime. So for me, it wasn't really about finding my absolute dream home where I'm gonna live in forever and grow old in and all of that. But obviously any home that you do decide to purchase is going to be an investment. So with that said, timing is really going to be everything. It can make so much difference. So for me, I actually started noticing in summer of 2024 that condo prices in San Francisco were just fluctuating. I think that sentiment for the city of San Francisco after COVID was really low. There were a lot of negative news articles. A lot of people were moving away.
Disclaimer, I think that San Francisco is a great city and all these news articles are greatly exaggerating what's going on in San Francisco, which is why I thought it was a good time to take advantage of that.
And that combined with a relatively high period interest rate meant that mortgage rates were pretty high. So that also meant that housing prices were going down. Generally, interest rates and housing prices, they move in opposite directions, because if interest rates are really high, that means it's harder for people to borrow money to buy a house, which means they can't afford to put that much money into a home. I also got this chart from Zillow, so you can just see how much prices have gone down for SF condos in the past few years. So I just thought it might be a good time to build some equity. Okay, so let's say that the timing is great, or you've decided that you're in a financially stable enough condition to start looking for a house, or you just want to stop renting. Let's talk about what to look for in a home. I feel like house hunting is actually such a fun part of the process because you get to look at all these different places and really envision yourself living there, and you get to see what you don't like and you do like. Things you can consider when you're looking into a home are things like proximity to work or to public transportation. You should have an idea of a hard upper limit. So I usually base this off monthly payments. So your monthly payment is going to include your mortgage, your HOA, your property tax, and your homeowner's insurance. And you kind of want to have all those expenses come down to 50% or less than your monthly income. Keep in mind though that a lot of the aesthetic factors, like the floors, like the paint and whatever, these can all really be changed after, so you don't need to place that much emphasis on it. Another thing you want to consider is the community that you'll be surrounded by. So for me, I wanted kind of a younger community, a little bit more lively, but you might also want an older community that's a bit more quiet, or if you have young kids, you might want to find somewhere that has like good public schools. Some factors I considered for home appreciation first was proximity to the financial district or tech district, or anywhere that's really going to be a place where people need to get to work and people need to commute. The second is any upcoming neighborhood developments. If there's any plans to build something new, such as a stadium or a train station or a park or a school. And then of course you're also going to want to consider safety and how secure this neighborhood is. So for me, I mostly started out with just looking on Redfin and Zillow, but of course you're going to need a real estate agent. I actually found mine by getting matched on Redfin, and she was amazing. She would send me summaries of every place that we visited after, and she would also send me listings that matched what I was looking for. And she was just really supportive throughout this whole process. And she actually ended up sending me the listing for the home I ended up purchasing. Also, pro tip, you should get the Built credit card, which lets you earn points on rent. And they just launched this new program where if you buy a home through one of their partners, I think they're partners with EXP Realty, but you can get a bunch of points on your down payment and your home purchase, which was not active when I bought my home. So I feel like I kind of got scammed, but that's one tip for you. You can also use Bill to pay for your HOA, and I think they're launching something where you can pay your mortgage payments on too. And you can get Bill at this link or also linked in the description. Okay, so let's say the timing is great, you found your perfect home, you're ready to put an offer in. You can now negotiate the price. So there's a few things you want to think about when you're negotiating to see if there's any potential leeway with the seller, or if you might actually have to increase your price if it's a really in-demand home. You can negotiate the price if it's been on the market for a while. So typically 3 months or more. It's kind of a longer time to be in the market, so they might not be getting offers. The place, if it needs renovation, a lot of people just want something move-in ready. So if you need to renovate, there's definitely leeway there. You can pay all cash. So sellers typically prefer all cash because it's a shorter closing process and there's less complications. You can also look at comparable homes. So this is normally based on location, and you can kind of see on a square foot basis how things are priced, and you can, if other comparable homes are priced lower, then you can negotiate. You're also going to want to understand the seller's motivations. So for me, my seller was actually a real estate agent and he was moving to Los Angeles, so he really wanted to liquidate all of his properties in San Francisco. And lastly, you should really let your real estate agent do most of the heavy lifting. They're going to be the ones talking to the seller and the seller's agent to really help you get the best deal. So let's talk about actually paying for this. There's two parts of buying a house. One is the down payment and the second is the mortgage. If you have enough cash, you can also buy it all cash. But I would say actually if interest rates are low, like back when we saw 2% interest rates, it might actually benefit you to take out a mortgage, even if you can't afford all cash, because you're likely going to be able to use that money that you're borrowing from the bank and invest it in an index fund and be able to make more. I think nowadays interest rates are sitting at about 7%. Mine was a little bit lower than that because I purchased my home right before the election, so interest rates were a little bit lower back then. I feel like you might be wondering where I got the money to buy my home, so let me give you a little bit of context on that. I worked in investment banking for 2 years, and during those 2 years, I received annual bonuses that were pretty substantial for somebody right out of college. So when I got those bonuses, I just stuck them into a high yield savings account, let it cook for a little bit, and then eventually was able to use that as my down payment. But there are actually programs out there where you don't need to put the traditional 20% down, namely what's called the FHA loan program. And these are really good for first-time home buyers or for people that don't have a lot of savings. And you only need to put around 3.5% down. But one note with those programs is that you might have to buy something called a mortgage insurance if you do that, which is just going to add on to the monthly cost. So that's something you might want to consider if you want to take out one of those loans. But before you even put in the offer, you're going to need to get pre-approved. Usually your realtor will actually require this of you, and this shows that you're really serious and the bank is ready to go. So now it's time to shop mortgages. And shopping for a mortgage is kind of like finding a significant other because you're locked in for a really long time. You're committed. You can't leave. Well, I guess you can if you refinance, but mostly you can't leave. And so you need to explore all your options. So the main things you want to compare: interest rates, the annual percentage rate, the total interest paid, the closing cost, and the loan terms. And this is where you can negotiate with the mortgage company too. I was able to actually negotiate my mortgage rate down 0.5% by comparing offers and getting loan offers from different places and sending them back and forth and asking people to match. So you kind of have two options when it comes to mortgages. You can either go with a bank or a lender. So here are some mortgage servicers. I would go to all of them, ask them for their loan offers. And then these are some things that you can do when negotiating. First is never, ever, ever accept the first offer. They can match. Lenders can match, and they will match to get your business. 2, ask about rate locks. So basically what this means is that if you think interest rates are going to go up, which that actually ended up happening to me, but you can ask them to lock your rate for 30 days. So then even if the market fluctuates, your rate will stay the same. Also going to want to understand all the fees. There's a lot of fees that banks and lenders have, such as the appraisal fees. And then you're also going to want to consider points. So points is basically where you pay a certain amount of money upfront to buy your interest rate down. And this is a really good option if you are planning on actually seeing out the life of your loan. So if you have a 30-year, you are going to live in this house and you're going to be here for 30 years, it's beneficial to buy the rate down, especially if you think interest rates are not going to go down in the future. It's not a good option if you are planning on selling the house within a few years, like me, or if you think that interest rates are already high and they're going to come down, because when they come down, you can refinance. And of course, before you get pre-approved and before you start going to lenders, you're going to want to start building up your credit. So these are some easy tips to build your credit before you apply for a mortgage. 1 is don't spend so much on your credit card. So you have your credit limit, right? Say it's like $10,000. Try not to spend more than 10% of that each month. Or if you are, you can pay off your card a little bit earlier than the deadline, because there's something called a credit usage fee that goes into your credit score. The second, and I actually didn't know this, but the second is don't apply for new credit cards before you're getting a mortgage, because you have something called an average account age. So how long all of your credit accounts have been active for. So the longer the account age, the better it is, because it shows that you have more of a history of having good credit and paying off your debt. And then of course, the most important thing is make sure you don't have any late payments. This is the biggest thing that affects your credit score. And this is the biggest thing that could be why you get a higher interest rate, because if you have a good credit score, and the better credit score you have, the better interest rate you can potentially get. After you choose the real estate agent, choose the house, choose the lender, you're also going to need to choose what's called a title company. And a title company basically facilitates the transfer of ownership between the seller and you, and make sure everything is all legal and good, and records it with the county. Okay, so now you've chosen your home, you've chosen your mortgage company, you've gotten pre-approved, you put in an offer, they accepted the offer, everything is amazing. So now you're gonna have to prepare a bunch of documents, and actually some of these documents you'll already have had sent in for pre-approval. But if you're curious about the kind of documents that you need to get this through, so the mortgage company is going to start asking you for a bunch of information about yourself. So they're gonna ask for proof of income. So last 6 pay stubs, for example. They're gonna ask you for bank statements. They're literally going to calculate your entire net worth. So every bank account you have, every retirement account you have, any stocks that you have, you're gonna have to send that all in. You're also going to need tax returns. So past year or past 2 years of tax returns. And you're also going to need identification. So a driver's license, social security, etc. Typically, from the start of the process until closing, it's going to be 20 days on single family homes and 30 days on condominiums. During this time, the bank is going to diligence you and the property. So with the property, they're going to also get a lot of documents about the past tax history. If it's a condominium like I got, they're also going to ask for insurance documents. They're going to ask for, I don't even know what they ask for. But my biggest advice is to stay on top of your lender, because this part is so stressful. The closing process, I think, is definitely the most stressful time, because there are financial repercussions if you don't close on time, because you and the seller at this point have signed a contract. This is going to close in X amount of days. And if it doesn't happen within those X amount of days, that's bad. Not horrible. I don't want to scare you. It's not horrible. But for me, my lender didn't get the insurance documents for my HOA in time. So we basically had to push my close a week back, and it was so stressful. And the seller made me pay him money per day, every day that it was past close, because he was still paying his mortgage and the power and whatever on the place. So I had to pay him like $200 a day because it didn't close on time. And so I was really mad about that. So my advice to you is to stay on top of your lender, check in with them every week, and then when it gets to that final close week, call them every day. Call them, make sure they're getting everything they need. If there's anything you can help with, or if there's anything that the seller can help with, you need to just know ahead of time if somebody's not responding, something's missing, whatever. Just make sure that you are their top priority. The closing process can definitely be slow, but communication is key, and just make sure to advocate for yourself. Okay, with all of that, on the final day of close, here's what's gonna happen. You are going to potentially have to go to the bank, because you're gonna have to withdraw a lot of money now, and you're gonna withdraw your down payment, and you're gonna wire that over to the title company. And then the bank is gonna have the final set of terms for the loan, because the loan also differs depending on what day you close. And they're gonna send all that money to the title company, and then the title company might have a notary come to you in person. If you're not in the city or state where you're buying the home, they're gonna have a notary come to you in person. You're gonna sign a bunch of stuff indicating that it is you indeed on the title, and then the title company is going to mail all those documents to the county and record it, and that's it. You are officially done. Congratulations. So it's a process. It's a very painful process. So thank you for watching. I hope that this was helpful for you. So stay tuned, because next we are going to move into my new apartment and decorate it, and I can't wait to show you guys. Don't forget to like, subscribe, and hit that notification bell for more. See you in the next one.